I have just one suggestion to make before we start. So I think the best case would be that we mute our mics while we are not speaking. It will just reduce any background sound.
Yeah.
Yeah.
Good morning, good afternoon, good evening to all our panel members and participants in this webinar from across the world. Today we are here in the first of a series of webinars from EPIKInDiFi, which is conducted in association with our partners, Zeal Solutions from Australia and Strategia Advisory from UK. Who would have imagined that most of the human civilization will be under lockdown when the world was celebrating New Year and moving to 2020 few months back? Nobody could have thought that a microorganism can bring the entire world to its knees. We all are facing a black swan event in our lifetime, which is impacting every aspect of life and business. The question is, why are we doing this? What is the purpose? What are the outcomes we are trying to achieve at end of this discussion? All my life, I've heard a phrase, death by PowerPoint. And in the time of lockdown, I can see this repeating by death by webinars. So what are we going to discuss different or do different in this webinar that it does not fall in that category of death by webinar? I think we'll try to do things differently. First of all, we thought of a comprehensive theme. The name of the theme is Pandemic Banking, Just What Doctors Ordered, which is nothing but how is banking happening at the time of pandemic. Second, we decided to do a webinar series rather than just doing one webinar. It's a spread over 3 weeks, and through the series, we not only keep the continuity on the theme, but also keep getting different experts and practitioners to get the right perspective on the topics. Respond, recover, and reimagine are the themes of these 3 webinars. We believe these are the most pertinent topics which every CXOs in the banks and financial institutions across the globe are wondering right now. What we want to achieve in this 60 minutes is to discuss 4 specific topics, which believe are very relevant and get views from our panel members, who most of them are practitioners and experts from the industry. We would also like to hear from each one of you in the webinar. You can ask your questions, which will be answered by the panel members to whom the question was asked. Let me take this opportunity to introduce my panelists. First of all, let me introduce Mr. DurgaPrasad Swaminathan, who is the Senior Vice President and Group CIO of Cholamandalam Investment and Finance.
Hello, everyone. Yeah.
DP, as he is known as, he has over 23 years of experience in companies like GE Capital, Sun Microsystems, and HP, and now he is playing vital role of Group CIO of one of the largest NBFC in India. Now I introduce Mr. Girish Natarajan. He is an expert banker as well as who has turned entrepreneur in last few years. Girish comes with over 18 years of experience in companies like SR, ICICI Bank, ABN AMRO, HSBC, ING Vysya, Westpac, IDFC Bank, finally turning into an entrepreneur. Moving on to Ian Ray, who is the Director of Strategia Advisory and as well as our partners. Ian comes with an extensive over 30 years of experience in banks like Prudential, UBS, ING, ABN AMRO, RBS, ANZ, and ERN. Moving on to the 4th panelist, Mr. Mridul Sharma. He is the Chief Operating Officer of Arka Fincap. Mridul comes with over 24 years of experience in banks like Bank of America, ABN AMRO, Tata AIG, Barclays, Dresdner, and IndusInd Bank. And finally, I am here. I am the co-founder of EPIKInDiFi. I have over 30 years of experience in companies like United India Insurance, IDBI Bank, Temenos, Infosys, Edgework, and now I am an entrepreneur. Moving forward, let us have a look at today's agenda. As the first topic of the first webinar, which is the respond, we are going to discuss following topics. The first one is we will start looking from the common impact of COVID on the global economy. We'll follow it up with a global impact on financial services due to the situation emerging out of COVID. We will also look at what are the expectations of various stakeholders which is emerging from the from banks and financial institutions. And various stakeholders are government, customers, and society, which covers all of them. And finally, we'll look into is technology or IT enablement key to respond better in this new normal of COVID-19. We'd like to share some of the examples, some of the measures which has been taken by various banks, across the world. Moving forward to the first theme, what are the common impacts of COVID-19 on global economy? One thing is certain, that you're not alone in this journey. Look at this slide. In this, you can see that the industries like airline, car manufacturing, oil rigs, hotels, these are the industries they have really taken a beating, and they have taken a beating very, very badly. This is a S&P Global Market Intelligence chart, which tells that over a period of just 1 month, the impact on some of these industries is massive, and it is kind of unsustainable. Let me try to get views from my panelists on what is the impact, global impact of COVID. Let me start with Ian, as he is sitting in one of the global financial capitals in London, and how he sees this impact. Ian, would like to hear your views on this.
Yeah, thank you, Raj. I think the first thing, as Raj says, so I've got a bit of an echo on the line. So as Raj says, I sit in London. Actually, I'm about 35 miles outside of London since this all sort of kicked off. So I guess my view is there's two things really. It's the social impact, which then leads to the business impact. So from a social impact, if you think probably 2 months ago, I was going to a football match with 60,000 other people. I was traveling on an underground train, could barely move, and go to a crowded pub and have a beer and this sort of stuff. And now, everywhere's deserted, right? So that leads to a few different things. One is the sense of anxiety which is out in the society. Secondly, fear for your own health and the health of your family and loved ones, the inability to meet your loved ones. So the term unprecedented times is much overused, but is absolutely true. So the impact of lockdown probably came a bit later to the UK than a lot of our friends and colleagues in Europe, but it still has the same effect. I guess moving on to business impacts, the government, I'll talk about government first, because I think the response of government has been interesting. I guess in the UK, we voted in a Brexit sort of free market government who have put in place the biggest socialist measures ever seen. So again, shows we are definitely in unprecedented times. That state aid, I think, has been absolutely appropriate, and I think the private and public sectors have actually worked quite well on that, right? So I think the furlough scheme to pay people and not lay them off, the lending that's been going on. I spoke to a colleague from NatWest yesterday, and they've completely lent all the money they're due to lend out, which I think is a fantastic tribute to them. Some of the other banks have been a bit tardier, but are still doing that. So I think that sort of support to the wider economy has been great from government and the private sector as well. So from a business perspective, we'll talk a bit more detail later on, but I think we've moved from a sort of contingency planning to working from home to thinking about the future. So it's been interesting to see that cycle as well. So it's very interesting watching from the safety of my country home what's been going on. I think as we go through this agenda, we'll see some of the themes emerging. But I think that the sort of summary is, definitely unprecedented times. the ability to work at distance is probably the biggest factor in my opinion.
Thanks, Ian. Let me move on to hear from DurgaPrasad. As you are managing technology in one of the largest NBFCs in India, what is your view on the global impacts?
Yep. I think what we have seen, and I think adding on to what Ian said earlier, in India, we have probably had one of the largest lockdowns across the world. So there has been a significant impact, I would say, on the migrant workers who have been stuck, in the places outside of their homes, which has been a big impact on their daily wage earnings and, on the general livelihood. We have seen significant, impact on the, perishable aspect of the different parts of the economy. So this has been a season where typically a lot of produce comes through, and a lot of that has started getting, damaged or spoiled because of the lack of mobility and the severe lockdown that we are under in India. Now, closer to our business, one of the big things we have seen is the impact from a supply chain perspective. All along in the country, we were looking at a transition from BS4 to BS6. And with this lockdown, given the globally integrated supply chain, what we are seeing is that the lockdown has impacted the ability to even source parts earlier, and now it has got totally to a complete halt. So even while some parts of the manufacturing may still come back up, the fact that the whole pandemic is unevenly spread across the world means that some of these will take much longer time for recovery. Meaning, closer home technology related example is we placed orders for a few hundred laptops to enable our staff to work from home. So while the manufacturing is done by the partner, it is still stuck in the country where it is being manufactured, and we are now waiting for that to come through. So I think there has been a wide impact across. So on one hand, we had the whole issue of the oil prices going down, and then with this whole thing reducing the consumption of oil, we are going to see a significant change in the consumption patterns, and probably, like many people say, is this going to be the new normal? So I think that's one thing we have to see as a technology enablers in the different enterprises. Are we better prepared to handle the new normal?
Okay, thanks, DP. That was very insightful, looking into especially the conditions what we are facing in India. I'm sure some condition may be different in other parts of the world. Let me move on to Mridul and Girish. Both of you are based in financial capital of India. How do you see this impact panning out, in the financial capital? Let me go with Mridul first, and then I would like to hear Girish, after Mridul gives his views.
Yeah, so, first point is what Ian covered is the social impact, which is, common across the world, because that is the first impact that everybody has personally seen. Now, beyond that, specifically, India and the financial capital, one thing that you're realizing is that the whole concentration risk, when everything is actually crammed up into one small dot of the country, and Maharashtra and Mumbai having the highest number of cases, the first thing is, when are you able to, get back to some bit of normalcy, given the number of cases that we're seeing now? And that basically, puts some risk on the continuity of operations and, how quickly businesses can kind of spring back. And broadly now, as we see, COVID progressing, it is about, the whole projection saying, how long do we have to continue to be in at least in situations where we have to be precautionary, social distancing, other restrictions have to continue. So we have to get used to a new normal. And I would say the corollary of, or the collateral damage of that is what you now will see as a economy contraction, or both at global and in India level. How much is the beating that the economy is going to take? So specifically, I think even if you look at, say, and Ian is there, so if we talk of, say, UK economy, already we've seen in 1 month almost 2% contraction, say, for the UK economy. For the Indian economy, we at least, if you look at a ballpark, you'll have 1.5 to 2% contraction per month of lockdown, because India lockdown has been the most severe in terms of nothing being allowed, when it started off. So the more, you prolong that harsh lockdown, you may actually go from a marginal GDP growth to actually into negative territory. So while we saw over last few days now and yesterday, the Finance Minister of India are actually announcing some of the measures, and some of them have been welcome, but they have been a lot on the supply side. We are yet to see what is the demand side going to be, because effectively in this kind of environment and with the social impact of it, when does a consumer actually come back to the market to say that today I need to buy a new car, or I want to buy a new refrigerator? So while we are talking of liquidity provision, and we will talk of in our next segment of our webinar today, but it is about the whole sentiment. I think another last point that I want to make here is that while government is trying to do what it is trying to do, but government coffers are also severely hit. So already, I think just in the month of April itself, we have in the states, the state's economy would have seen close to around 97,000 crore, which is around 971 billion revenue impact, and that is something that raises a question saying that if we have to give a real cash stimulus, where is that cash going to come from? So I think these are my points, and we'll delve on them further as we go along on the webinar.
Sure. Girish, what's your thought process on this topic?
Yeah, I guess. Am I audible? Yeah.
Yes, Girish.
So I guess a lot of these points have been already covered by the panelists, but I would say Bombay is no different from the rest of the world. There has been a major impact on trade and trade flows due to the lockdown. Things are pretty much status quo. The mindset of corporates, employers, employees, and workers have changed. The importance of technology has been understood now by one and all. And all are now willing to embrace it with open arms, as if it has not been done ever before. On a lighter note, lives of we men have changed. At least my fingerprints have changed. Doing the daily household chores and work, it does not. My mobile phone doesn't. No longer opens with my thumbprint. So yeah. So people are supporting each other in their day-to-day lives to the extent possible. That's a welcome change that I can see, and Bombay always known for its spirit. I feel that there is a sense of uncertainty in the minds of people as of now, in terms of what next is the big question. Demand for essential items have soared, whilst the need for key state revenue generating products such as fuel and liquor has seen a sharp decline. So I guess, yes, Bombay is no different, and we all will have to stand together to ensure that we see these tough times through. So that would be my bit.
Thanks, Girish. That was very, very insightful. And having discussed this, the global impact, I think let's discuss on the next important topic, that what is the global impact on the financial services. So we have been examining that what are the various impacts which financial services is facing across, and I think these 6 themes have emerged very, very clearly. The topmost of them is the inadequate digital maturity in the banks and financial institutions. While the digital as a trend and the work is going on for for years, but recently we came across one of a large bank in Southeast Asia that they are not able to meet the customer expectation or demand, as their channels are not adequate. So the digital has worked, but it has not worked across depth and breadth of the organizations. The second one is we are seeing that the sharp fall in branch-based transactions, and I think this is, as Mridul has said, this is going to remain the new normal with the social distancing. That it's not going to be like the old time where the branch is always full with people and doing transactions. I think that's a clear, there is a going to be decline. And as the mismatch between demand and supplies are happening across the globe, there are going to be elevated bankruptcies across the business, and especially the MSME and SME sectors, which are very, very susceptible, to these kind of risks, this kind of disruptions. I think there are a lot of them are in risk. And when they are getting into disruptions, bankruptcies, that will naturally lead to the delinquency on the banks. So it is it is more like a domino impact. The bankruptcies in the business will lead to delinquencies in the bank, which has a negative impact. The stretch credit lines, I think everybody is expecting banks to do, the wonders. Everybody is thinking that, banks are full, flooded with money, and this money can be just spread out. We will see in the subsequent part of the webinar that, what are the expectation of various stakeholders from the bank. And finally, the exchange rate fluctuation. It just based on how we have seen that how things have emerged in last couple of months. The exchange rate has been really volatile, like the stock market. So these are some of the themes which we have based on our discussion, our research. These are some of the themes which have emerged as probably the global impact on the financial services across. Let me go back to my panelists and get their views, whether they feel that these are some of the themes which are there, or they have some other point of view. Let me go to Mridul first. Mridul, given this background and plus your experience, what do you see as the the impact on the financial services across the globe?
So Raj, while what the 6 themes are there, and that is there, but I'll add another point here is that when we actually look at both the demand and the supply, and especially financial services, there is deposit side of the banking, and there is the lending side of it. At the moment, one is that there is that mismatch, because there is definitely going to be demand, but the risk has got heightened up now. And so some of the policies that are going to change are going to be very knee-jerk kind of reaction, and some of it is based on that we still don't know what is actually what is cooking and what is going to happen. So when we started the webinar, you covered certain industries that we are very clear saying there is a very high impact. So if you look at some of the discretionary spends, we know that demand is going to take very long to kind of come up. At the same time, there is going to be demand for credit from them. Now, how do you kind of perceive that kind of risk? So while governments are coming in and trying to in various economies, it has been done different ways. And we heard for India also now, where at least some credit guarantees being given, but it is more about actually giving, I would say, credit availability. But effectively, if that credit has to be taken, interest has to be paid off that, and there has to be business to basically generate revenue out of that. So that is something that we need to address. Second thing, what you covered about the transactions and the electronification of that. Now, this is something that has been happening for some time. So there has been a challenge even on the bank side when we saw that the branches are not really fully utilized, because people actually started using some of the electronic channels. The larger issue now is that whenever we have created these processes which have been electronic, they have not been fully electronic. We have still kept some physical drop-off points. And sometimes, while at heart you try to make it total customer-centric digital end-to-end process, but you put in some digital physical steps in between, and then it derails. For example, in today's situation, if I look at from a lending standpoint, if I still have a process where there are some physical drop-offs and I can't move forward, that means I cannot provide the service unless physically some of that stuff can happen. So that is a question which is actually going to come up, and we need to think is that how do you make these processes now completely person-to-person touch or zero-touch processes, wherein it can be done electronically. I think we have enough tools available for that, and even processes have now come out with maturity. But it is for us now to think, saying that how do we put the client experience in the center and actually take off these physical drop-offs.
Okay, those are some of the very insightful thing. I think the key theme which we have missed out is that banks are having liquidity, but how do they utilize at the right place? I think that's a very important point.
So yeah, the point there, Raj, is that people are a little fearful of if you're looking the LTRO operations that have happened in the past, and especially the last one that happened for the say NBFCs. While whatever happened for the banks, there were I think 500-600% demand, the one that they carried out for NBFCs, it was not even, I would say, 25% subscribed, because nobody wants to, for example, pick up that fund and give it to somebody where they perceive there is going to be risk. So now, while it is about that, it's going to take its time for people to actually redraw and see, what is the impact on the risk side.
Okay, makes sense. So I move on to Girish. Girish, with your vast experience in banking and these themes, how does this resonate with you?
Well, I think banks and FIs have seen a huge spike in the digital transaction globally, and this is going to be the trend moving forward as well. Penetration of technology is going to be a major aspect in terms of the lives of corporates and the individuals per se. Whilst there is liquidity in the current system in India, the credit flows definitely continue to remain a challenge, primarily because of restricted trade flows, as highlighted by Mridul also earlier. And banks are currently worried about the counterparty risk. The first and foremost thing is to ensure that the capital is safe. It's not about return on capital, but return of capital at this point in time. So delinquency rates definitely have increased, and frontline staffs who I speak to today are currently talking about recovery rather than sales. But there are financing institutions and banks who are taking this as an opportunity as well, and marketing solutions which are technology based and products that create stickiness with customers and clients. And at the same time, apart from bringing in NII from the credit side, fee revenue is something that banks and FIs are also focusing on. So I guess these are the aspects that banks and FIs will continue to focus and push technology to enable convenience and ensure that they reduce their costs going forward, and obviously increase productivity and hence revenues. In the recent past, the IBA as well has recently submitted a proposal to the RBI on the creation of bad banks, of a bad bank to manage the NPAs better. So these are all steps that have been taken in the right direction. But I still feel that probably the implementation bit is going to be the key. You can keep pushing money, you can keep talking about technology, you can keep talking about going as much as digital as possible. But at the end of the day, it's on the ground reality that hits us hard. And implementation is going to be a real key in getting the economy back to its feet. That's my 2 cents.
That's really important, Girish. The implementation part. I mean, government can do whatever they want to do. They can, make policies, give money, but if it's not implemented on ground, I think that's the key takeaway. Absolutely. DP, how do you see this, global impact on the financial institution, which is happening right now?
No, I think, like Mridul mentioned, there is going to be a huge, influx of people requesting for funds. So that is definitely going to be there. And like, Echo Hicks thought that the risk of lending to such borrowers is only going to increase over time. Now, in fact, what RBI has done, in the past month or so, has made sure there is a clear mechanism to give moratoriums to people who have borrowed money from different financial institutions. And so there is a period of 90 days that they have initially set across to, make sure that people who have been stretched from a cash flow perspective and who have challenges in paying back their loan obligations have this window of time to, realign their cash flow and be in a position maybe starting in June. But I think given the way this whole pandemic is stretching, there is a likelihood that moratorium period may have an extension again. Now, what happens is this is going to affect for the financial institutions everywhere. You have a liability that you are borrowing against, and your asset inflow is not going to match. So there is going to be an impact from an asset liability matching perspective that you need to work out and make sure there is a clear mechanism to get that back on track. Now, on a different angle, again, as a lending organization, I know a lot of guys say lending is easy, actually collection is more difficult. And that's where, a lot of digital enablement really is going to be, more prevalent. And again, Mridul rightly pointed out that while we have put in some pieces of infrastructure in place for the digital collections, it's still not fully frictionless. So I think that's going to be an area where a lot of financial institutions are going to come more and more and say, how do I make that a lot more easier? Because we have put those enablement pieces in kind of different blocks, but not seamlessly stitched together to make it easy for the customers. So that's an area where, again, it's an impact of probably half baked or not fully thought through solutions that need to be revisited. And I guess globally, it's going to be a lot of capital inflow and outflow across different organizations, because you will see a lot of people saying, is there going to be a supply chain concentration in different or specific parts of the world? And if there are organizations who need to move on to different geographies, then that will also see a flow of capital into different parts of the world. So you will see that happening as well in the coming period.
Yeah, I think you have touched some very, very important point, especially around the collection and how it is important for the institutions and banks to really focus on the collection part of it, and how to scale up the digital collection journey, which may not have been there very, very effective. Ian, I would like to hear your views from the global perspective. You have seen the crisis of 2008 from sitting in one of the largest banks in the world. How do you see it, these impacts coming on the banks and banking sector?
Yeah, I've seen a few crises actually over my career, so it's probably the biggest one ever, but there you go. I've echoed everything my fellow panelists have said in terms of the impact on revenues. I think cost, a lot of these organizations were challenged on cost anyway, right? So that's going to be even worse. And the overall effect on the balance sheet and credit and so on. So some other angles that I think there's also going to be something, governments are putting a lot of aid into this, and governments don't give money away, they want it back, right? So I think we'll see at some point in the future, we saw definitely in the UK, probably the US as well, an increasingly sort of aggressive tax regime, and I think we'll see more of that. And so what that means, don't know, but it will be there. Just sort of change tax slightly. I think there's a lot of operational aspects as well. So the obvious one being, we're doing this remotely, right? So we probably would have landed in a hotel somewhere in Singapore or Mumbai or London or wherever. We're doing it virtually, and that's sort of the way we work today. So I think it's two aspects. One is the way we work. There was an increasing move to sort of more agile working and so on. I think that the appetite for that will increase. I think that the need for it is there. The traditional ways of sort of military type hierarchy in organizations doesn't necessarily lend itself to this way of working, right? So there's the actual methodologies of working. And secondly is the actual, the tools themselves, collaboration tools. This is no substitute for going into an office and socializing over the water cooler or running a board meeting. So they're great tools, Teams, Zoom, whatever, all good tools, fantastic, and have really been a sort of great asset to the world. But it's not the finished article, right? So I think there's some work that needs to happen there. Digital, we spoke about a number of times. I've been on a digital journey for a long while, and it's moved from just being a mobile phone app to something else. I don't think it's still complete, right? So a digital journey isn't just having an app; it's the whole process. So I think again, this will push that need to fully complete that digital journey, which then lends itself to another problem, which is cash, right? So we all sort of envision a cashless society. Unfortunately, the entire world doesn't carry smartphones. A lot of it does, but not everyone. So I think there's a societal impact there we need to consider in terms of underbanked, unbanked, and the use of cash. And I think in summary, and we'll talk more about this later on in this webinar and others, this is a hotbed for innovation, right? So lots of people were playing with fintechs, using fintechs. Crises tend to be a great time for innovation. So I think there will be, and there is, an appetite to look at new ways of doing things. And in my experience, that is innovation. That's what it's about. So I know a lot of organisations, small startups which have got great products, and this could be the time.
Thanks, Ian. That was really helpful. I think the point you touched upon is the digital journey and cash. I think cash is, still a real problem, how to manage cash. And various economies have, lots of cash floating around. So I think there is a conflict between the cash and the digital. So maybe as you're saying that this is the time, in the time of crisis, I think the innovation will kick in where maybe the cash starts taking a back seat and the digital comes forward. Let's move forward. Let's go to the another important topic that what are the expectation of various stakeholders from the banks and financial institutions? Because as I said, that everybody believes that the banks and financial institutions are flooded with funds, and they should do just distribute it. Okay, it's not, banks are not like normal business. They're like distributor of cash. So we have looked into, we have divided the whole, the impact in about 9 themes between government, customer, and society. So these are the 3 broad stakeholders who are there, and you can see that what each of them are looking for. So government is looking for, banks and financial institutions to help the small and medium scale businesses. They are looking for banks to do the right card, and well, they are expecting the banks and financial institutions to do this. They are also expecting them to track their not performing assets. They don't become across the norms and things like that. So we heard a lot of things about the governments across the world giving different financial packages, routing financial packages to the banks and financial institutions. But we haven't heard saying that you change the the NPA norms, make it from 90 days to 365 days, those kind of things. What are customers expecting? While everybody understands that there is a problem, of the COVID and the related challenge, but they still expect the seamless, the experience to continue and get all the services whatever is required. Everybody expect that financial hardship relief should come, and it should come as a matter of right more than anything else. Because of customers are not getting what we saw earlier, that there is a change in trend, that there is a decrease in the branch transaction. Obviously, those transactions are going to the call center because customers are still having their need of banking. So there is a demand for scaling of the call center infrastructure. And finally, what does at large? They are saying that all these things are fine, but you please work with purpose and integrity. You don't have to be a business making profit. They're saying that you must protect all your workers. You put a tactical measures for your workforce. The workforce should not be put in any kind of inconvenience. And they are saying that the society's expectation is that probably you suspend the payments of all the the section of society we are directly affected. So these are the various expectations of the various parts of the stakeholder within the ecosystem. Let us hear that what are the practitioners on ground are seeing the expectation coming from these different stakeholders. Let me go to DP first. DP, what is your view? What are you seeing these expectations from various stakeholders?
So, Raj, I think this is a very important area where it's going to be a mix of factors to consider. On one hand, you will have a lot of people saying, should we get the economy up and going? There will be some people who will, probably get affected by the pandemic, but we need to get things back on track. And on the other hand, people do say there is a huge life at risk. So you can always get the economy alive and kicking, but you can't ever get a person back up alive. So this is a kind of a dichotomy that the government and the key national decision makers face. So I guess what what we've been seeing as an ask is, how do we make sure that when things slowly start getting back to normal, how are we inspiring confidence back in the consumers? Because today, if I'm more comfortable, eating safely at home, or maybe preserving my cash against discretionary spend, how do I, get the government to say, okay, hey, you can go out back there and start spending. This is the way you need to go back, and because all this consumer demand will be a big way to, reinvigorate the economy. So that's a big area where we will need some push from the government, because that's going to have the first consumer level will then trickle up to the SME and MSME level. And that's a big area where, as a financial institution, we will see them as the engine of the economy. That once the consumer demand kicks in and the MSMEs start, getting up and running again, you will see that having a larger impact on the overall economic chain. So the other aspect, which in fact the past couple of days we have seen significant announcements from the government, is making sure there is a level of confidence being given to the SMEs and MSMEs to get them on their feet again once things come back to normal. So that's going to be a big part of what we see as our ask to say the constituents that we are funding, whether it is the the retail borrowers or the SME borrowers. If there is a way that we can get them the confidence that things will be back to normal and there is going to be a significant demand to consume the products and services that they are part of, then the whole financial system gets slowly back on track. So that's going to be the key. I know MPA norms will, you will have the government view, you will have the regulator view, and you will have a stat auditor view. That's something will still need to get worked on. But I guess the key thing to do is obviously get the economy back on track.
Okay, very well said. Thanks a lot, DP. Girish, how do you see these, stakeholders' impact on the banking and financial institutions?
Well, there are a few aspects that you talked about, Raj, very rightfully so, in terms of instilling confidence in the minds of the workers and employees to come back to work. So I was reading somewhere in an article published in the EP saying that, while corporates today talk about corporate social responsibility, there will also be an element of corporate health responsibility that is going to come in the due course of time. Because that is going to instill of confidence in the workers' minds to come back to work and actually start kicking in production. So that will be an important aspect to consider. But having said that, unsecured credit will obviously need to be pushed, by the banks and by the FIs to ensure that there is enough working capital required, enough the working capital requirement as far as the SMEs are concerned is taken care of. Because SMEs are one of the most important elements of the economy. They contribute close to 9% of our GDP, 30% of our exports, and 45% of the manufacturing output in India. So unsecured working capital solutions are going to be a key aspects. Solutions such as factoring, invoice discounting. This will actually inject the right kind of capital that is required for the revival. So that will be an important aspect. Well, credit assessment will not be straitjacketed anymore, is what I understand. Templated lending may not work for all. Banks and FIs will have to look at the entire ecosystem of a corporate and understand them much better holistically before giving them the rightful credit that they require, which will actually probably also involve assessment of the debtors, creditors, and all the other various stakeholders. Past history probably would be taken into consideration to actually assess clients. So credit assessment I don't think is going to be as straitjacketed and templated as it is as today, and rightfully should not be. The other aspect in terms of onboarding and documentation is also an issue with FIs and banks because a lot of paperwork has to be done. The entire digitization of this documentation piece is a humongous task, and that will necessarily we need to be looked at. There are currently RBI prescribed norms in terms of eKYCs doing the rounds with respect to AI-based Aadhaar and PAN-linked processes to enable faster and convenient onboarding of clients. This will really need to be pushed to ensure that the SMEs are given or the corporates are given timely injection of working capital when that is required. The issue is not about working capital requirement. The issue is about timely working capital requirement. Because if I require money today to pay off my creditors, or I need to use it in my working capital requirement, I need it today. If the opportunity is lost now, I may miss out on an order, I may miss out on the production. So those are the certain aspects that I think one will have to take into consideration, and those would be the expectations from the banks and the FIs, because banks and FIs, I feel, are going to play a pivotal role in taking the economy digitally forward. So that is an important aspect that I would probably feel as.
Absolutely. I think banks and financial institutions have to take the economic forward digitally. I think absolutely. I think Girish, you are spot on that aspect. Mridul, what is your view about these expectations? I mean, are they realistic? Are they going to have an impact? What do you think about these impact, these expectation of various stakeholders from banks and financial institutions?
See, Raj, societally, as Devi put it, that dichotomy is there in terms of, we need to get, stuff moving quickly, and there is no other, you have to start running to reach somewhere. There is no other way that you will reach there. At the same time, you're saying, do you want to make this person run because the person may fall down and die, right? Now, that is going to play out, whatever I am hearing and seeing and projections, it is going to play out, I think, if not more, at least 6 to 9 months. Depending on how the waves come in and waves go out. And I think various parts of the world are going to, face it in different ways. Now, given that environment, I think we are seeing that, what is the expectation from financial institutions. So just now, for example, Girish talked of, the working capital requirements and how quickly we can actually disperse the timing of it. Now, we have to really see the requirement comes in finally when business starts moving in terms of there has to be a sales and there has to be a demand. So let's take an example of, say, real estate sector. Real estate sector, for example, in India, at least the mid to upper scale has been in doldrums for quite some time. Now we had this whole talk about the affordable housing sector, and we really saw first-time home buyers coming up, taking credit, and some of those sales happening. And who is that consumer? That consumer is not actually now seeing people walking on the roads back home, taking auto rickshaws and taking these mini trucks and trying to get back home. Now, unless as a policy and policy makers do not realize these implications and act in time, so the whole debate that, for example, we are having right now is that could it have been done differently of getting the passage back to home to people before the lockdown was implemented. There can be debates on both sides, but the point is that everybody sees this from the perspective of where you are sitting. So I may not have that bad a memory of this lockdown because I was sitting very comfortably in my home. But what about that guy who walked 1,500 kilometers to his home in scorching sun with 10 rupees in his pocket? Do you think that guy is going to return back? So we are going to face now, especially I'm talking from India's standpoint, that we will have at least and there was a huge amount of skilled and unskilled labor, which you call as migrant populations, were citizens of this country, that we are going to see 30 to 40% of not returning back, at least for quite some time. So one is that, even if I supply, credit to an industry today because, the past standing was good, and maybe that industry is not in a segment which actually is going to see a major downturn. But, can that person, one, kickstart, the production? Second is, who is the consumer? Where is the sales going to happen? So right now we are saying, apart from essentials, basically, your food products and basic essentials and medicine, discretionary spend is right down to zero. And, some people are rejoicing saying that, we are actually managing in 25% of our budget because we are not spending anywhere here and there. Now that is all interlinked together. It's not sitting in isolation. And effectively, financial institutions also are not, the end, because they are not the mint. They are not kind of printing money there. They also get that raw material from somewhere else. For example, Indian NBFCs, 70,000 crore worth of debt is going to mature in this quarter, right? So finally, they have to also return it back to wherever they've taken it. While the government has now started giving, these credit guarantees and, some of the supply, and we have to see the fine print, what comes out. But everybody receives it and supplies it further. And when you supply it further, you take the risk on yourself. So it is, I think, a little more complicated. It's not going to be simplistic, but I think the whole underlying theme is that till the time somebody who's at the end of the food chain, the end consumer, does not get the confidence and actually, come back to the consumption cycle, we are going to face, these risks over quite a significant point in time. And in this time, right now, what you see, mostly whatever has come out is more on sustenance. It is not preparing you to start running. It is all about how do you sustain. So if whatever norms have been given by the Indian finance minister or otherwise, It is for you to ride out this for the next 3 months, 6 months. That's it. So I think now we'll have to see what happens 6 months down the line and how long it takes for you to actually get back to your normal cycles.
Some very, very pertinent point. I think policymakers taking the right decision at right time. The mismatch of skilled and unskilled laborers, some of them not coming to the spots where actually the productions are happening. I think these are some real challenge, which is going to derail all the the taking it back to the rail kind of effort. Ian, how do you see this whole thing panning out in terms of the expectation of stakeholder from the banks and financial institutions?
Yeah, again, I'd echo a lot of the conversation that's proceeded, and I think the last point's a good one in terms of that societal impact. And we can sit here and think about what banks do, but banks reflect what's happening in society, and that's what we need to keep an eye on, right? So just a couple of other points really from a government perspective. We're seeing obviously deferment of regulation in a number of places, of Basel IV, and different reporting standards which were due to be implemented have been deferred. I guess that's a good thing. It's a practical thing, but the regulation was put in place for a reason, right? So I think we just need to see what happens there. And I said earlier, I do think there'll be potentially a stricter tax regime as well, which could add to that regulatory burden. So I think that's something we just need to keep an eye on. It was a burden to banks, and it isn't at the moment. That doesn't mean it's gone away, right? So that's the first point. The second point I think is around customers. And again, we've spoken before, the customer interaction is the important thing, and it goes without saying, assistance when it's needed, and we've seen scale up of call centers and all this good stuff, but that frictionless sort of experience is really important. I had experience where one of my debit cards was blocked by someone's security team, and I couldn't contact them, and all of my direct debits failed, right? So it's just, it's really not acceptable, because it's not a difficult thing to deal with, right? So, but it's pretty important to me, so, and I'm not a single mum with 5 kids locked in a sort of housing estate somewhere. So, I think we just need to look at that customer interaction. It needs to be improved greatly. And I think the part is products. So we touched on earlier on, I think working capital products for SMEs, I think it's going to be really important. At the end of the day, these organisations which normally suffer from cash flow anyway, it's even worse now, right? So looking at innovative products to sort of keep businesses on their feet. And I think also for an individual perspective, maybe people saving up for a car, maybe sort of there's more focus on the health sector now. I know in the UK, the NHS was seen as a tax burden, now seen as rightly so as national heroes, right? So maybe customer sentiment will change, and there'll be a bit of sort of prioritisation in terms of people's spending habits, and maybe some products that have to reflect that. And I think my last point really is in terms of society. Banks are big, influential, wealthy, powerful, intelligent organisations. They just need to be good corporate citizens. A lot of the sentiment in the UK is we bailed the banks out of tax money. Please help us now, right? And I think that largely they are, but probably not enough, right? So, or they're not marketing enough, one or the other, right? So I think they just need to be good corporate citizens.
Absolutely right. Absolutely right that, bank being, the good corporate citizen. And I think that's one of the expectation of the society is absolutely there from the banks. And I think the point that, deferment of, some of the regulation point, which Ian, you brought out, those are, I think, the practical need of hour at this point in time, so that, the banks and institutions get the breathing space, then in turn they pass on those, benefits to the customer. They help in creating the liquidity and those kind of things. Like the Mridul said, the point that 70,000 crore, NBFCs are, due to pay this month. And if those regulation and still those tightening is there, I think it's just short of a failure. And I think those are the important thing which policymakers have to keep in mind while framing the policy and implementing it.
But we shouldn't forget why the regulation was there. So people need to behave themselves, right? So you're being given some more time to do something. So behave, right? Don't exploit the situation. Be a good corporate citizen.
Okay, thanks a lot, Ian. And now we are moving to the last last topic of our webinar today, where we are going to talk about the is technology or IT enablement is key to to respond better in the given situation. Let us look into some of the themes which are emerging, and as we have put it here, this is based on what we are seeing, what we are hearing from our customers. You will also realize that what we have discussed in last 50 minutes, they are pretty much they are all linking. So first one is digital loan life cycle. A lot of digitization, digital transformation discussions happen, but is there a true digital journey or digitization of the entire life cycle has happened? Are there true blue, straight through digital processes are there? Debt collection, we spoke about debt collection is more important than even, giving the lending at this point in time. Whether, the customers are having those, digital collection solutions where they can encourage customers to pay through the digital channels. What is happening in terms of the current, in the ongoing, where the the banks are facing the liquidity, delinquency, and all of that? What happens in that case? How do they monitor and measure their, their portfolio that they don't go, bust on their own? Social distancing, we talked about social distancing. How do you manage social distancing while still having the, the customer services going on? So people will come to the branch because that's a natural tendency of, a section society to come to the branch. Then when you come to the branch, how do you still maintain the safety of social distancing inside and outside? And as I think some of you pointed out, I think video is going to get extensively used in banking going forward. I think with the new normal of social distancing and various other things coming into picture, I think video is just going to be so very important, right? From KYC to the field investigation to customer verification, all of that. I think the video is just going to stay here for with us. And finally, as I've seen that there's an extensive load of the the call center. The bot-based services are going to become very very important. The artificial intelligence, the robots, they're taking that, sharing that load rather than adding a lot of people in the workforce. So I think these are some of the things which we are seeing happening. And these are some of the areas we as a tech company we have worked on solution which is right now getting implemented in with different customers across different parts of the world. But having said that, I would like to hear from all of you that what do you think that is the IT or technology is the the real panacea to address or get out of the current situation. Let me start with Girish. Girish, what is your view? I think you have expressed something about digitization, but what's your view that what needs to happen in terms of technology?
Absolutely, Raj. There is absolutely no doubt that technology is going to be our best friend in time to come. Whether you like it or not, you will have to embrace it and keep pace with it. Otherwise, you will be lagging behind. Analytics does definitely help you in identifying risks and take preemptive measures accordingly. Concepts such as e-lobbies, branchless banking will obviously help in reduction in costs and at the same time provide convenience. A good point to note specifically in India is that the young population in India is really growing. So the ability to adapt to new technologies will be far better, I would probably say, than what it was in the earlier times. So that's a good heartening sign to note because the youngsters are already digitally able at this point in time. Customer assist solutions with respect to debt collections, online working capital management solutions are going to be the order of the day and will be very, very necessary. But will technology be the only driving force? I would probably say no, because this will definitely require a change in the mindset of the end consumer. And to make it happen, together, we will need to be the change. That would be my thoughts on technology.
I think that's absolutely spot on. The changing the mindset of the customer, because unless that happens, we can keep pushing from the banks and financial institution and the technology provider, but customer has to, grab it. Ian, you have seen the technology evolving over your long career, in different banks in different parts of the world. How do you see that? Is it a technology, a panacea for the current situation?
Yeah, as I said earlier, I think it's these times are going to be ripe for innovation, right? So people are looking for solutions, and I think there are many out there and many more to come. And I think the two areas that sort of interest me really are that whole sort of the new workplace, I guess, or the virtual office, and again, both from two perspectives. One is the way people work. The traditional ways of working don't necessarily lend themselves to working virtually, and also the tools themselves. While the tools we've got today are good, it's not the same experience as when walking into offices. So so I think there's quite a lot of scope for opportunity to work in that space. The other part of it, I guess, is if we want a better new business models, and maybe they're not new, maybe they're the refinements and cashless, working capital solutions, maybe things in the healthcare sector which haven't been thought of before. I think things will emerge, right? And I think they'll be enabled by technology. Roger, mute.
Sorry, Ian. Sorry. Thanks a lot. Yes, it's a quite important point of innovation, because I think necessity is mother of innovation, and I think there is a lot of necessity to handle this new situation, and I am sure that's where the new innovation will come about.
Yes.
Yes. Mridul, how do you see these the technology being probably the panacea, as I'm using that word again and again?
So Raj, see, what we have seen in this instance, when physical access is restricted, not just to the customer, but also to the service provider, the basic requirement is that your machinery keeps working seamlessly on the supply side. And second is on the demand side, how much of your services you are able to expose to your customers without actually a physical contact. So only way of doing that, and we have been doing that over the last 2 decades, is how much electronically we can expose our services to our customers. Various products and financial institutions have done them to varying degrees, and that is the point we discussed before also, that do you actually make it total zero touch and direct to customer, or you do still keep some physical elements. There will be still some processes which still require some physical element, but I think if we put our mind to it, you may be able to remove a majority of that and actually get it to the customer's mobile, if that be. So today, for example, on the lending side or on the deposit side, how many of the services actually we expose to customers where customer can just make a click, it's an authentication has happened on the app, and request, and say, for example, today when we're talking of working capital advance to an existing customer, do we provide it just as a click of a button on the mobile and the disbursement can happen within a few minutes? Something that has been done, for example, on the unsecured side for pre-approved customers, where you say just click yes and I'll get the money into your account. Second thing, on the supply side, what I discussed is that it is very, very important that the stacks that you build and the infrastructure that you run it on is something that runs even if physical presence is not there. So for example, in our case, luckily, we started building this organization 1.5 years back, and our key objective that we put for ourselves is that if we are born now, we have to build it using the tools and technologies of today. So 100% cloud, for us meant that we didn't have to flick even a single switch, including some of the stacks that we take from you. Cloud hosting provided us the capability that we could scale up, scale down. So even from a sustainability standpoint, right? If, for example, we were ready at your with you on certain workloads to go live, and we thought now it is getting pushed by 4 weeks, we could just switch those workloads off and actually save cost on that. At the same time, we didn't have to, for example, on video conferencing and other stuff, we didn't have to kind of manage any of our on-premise, or something has stopped working and I can't go to office. So how do I kind of manage that? So those realizations are actually now coming to a lot of people, because especially organizations which have been in business for decades, there is definitely a huge amount of legacy which is sitting inside. And whenever you look at legacy, it takes currently what you have to handle today take precedence over handling that. So I feel that is something that will get a push. And second thing is, for example, the tools and technologies that you guys are kind of building, and especially on the collection side or zero touch processes, how quickly you can make changes to your workflows. Can you implement it in real time? Is it exposed to every employee on the mobile itself? Is something that actually has to be, given precedence to, because, rather than, doing in between automations. While Girish talked of e-lobbies and stuff, I would say go beyond, just put everything onto the customer's mobile phone, and make sure that it works without your personal intervention, and whatever you need to, do is available to on your machine, on your laptop, wherever you are. Just need a connection to the internet and you can change those workflows, direct that flows. That is something I think what I see as a new reality now people are going to walk towards.
Thanks, Mridul. I think, it's really heartening to hear that, some of the solutions which we are working with you are giving you the agility to switch over to new products based on the, the market demands, and some of the solutions are really helpful. Thanks a lot for that. So DP, coming to you, last about technology being the panacea. What do you think about it? Being the group CIO of a large organization, how do you see about it?
No, I think technology has been a key factor in the continuity aspect of businesses post-lockdown. And during the normal course of operation, there will be significant asks from other functions that we need this, and that's why we need to be in the office and so on. And a lot of those have been significantly questioned as the operations continued post-lockdown. So a lot of those foundational assumptions are no longer true, because we have proven that things work in a more technology connected enterprise, even when the physical access to certain pieces are no longer there. So I think that's like what was mentioned earlier, a mindset change, but also again, when you are pushing people into a certain circumstances, they adapt, and that's what organizations have done. And I guess one big part, while digitally we will keep pushing the frontiers. I think solutions like what we have from you, and ability to quickly make changes to it and get it in front of the people, has been a big factor in making sure we have the digital outreach to our customers. So I think it's more, and like Mridul said, we need to be building on such kind of capabilities to make sure we are ready for any such disruption should it happen in future. I think the one last point I would like to say is that while an organization may be digitally ready, it also has to make that outreach to win the customer's trust, because digitally you may be ready, but in some parts maybe not necessarily in a metro kind of setup. Once you go into a tier 3, 4 kind of locations, a lot of people need that initial trust to be established before they can then switch from physical to digital. So that's going to be an area where we need to give the comfort to the customer that, hey, whether you are dealing with this person or dealing with a bot, it is still the same enterprise and the same trust and integrity in front of you, and that's how we can have a seamless journey along with the customer.
Thanks, DP. I think thanks again for endorsing what we are able to work and provide agility to your organization, to your business, reaching out and making quick changes. I think one thing is very clear between what you and Mridul said. The old versus new, and how does the legacy maybe probably be the single differentiator between the people who will survive and climb the mountain versus the people who will be left out. So I think that's absolutely, in my mind, that's the most important thing. I'll just take back to the slide and just say that these are some of the new solutions. These are the areas, and in these areas. We have actually built some of the solution to help banks and financial institutions to get over some of the problems. I think the debt collection, the maintaining the health of the portfolio, that is something which we are worked on a solution which is getting implemented right now in Australia and Southeast Asia and few places. That how do you have control over your portfolio, not let it deteriorate over a period of time? How do you manage your customer service, branch operation, keeping the social distance guideline in place? How do you have a consolidation of entire digitization of your entire workflow and have that agility, like Mridul is saying, that do it in hours and days rather than months and years. So some of these are there, pretty much there. The participants, I will open it for questions. Next 5 minutes, we'll take a couple of questions, and you can, write your questions. We'll direct it to the panel members for them to, answer your questions. I have few questions here. Let me pick up. I think DP has already answered some of the question. So one of the questions, I think, let me ask, DP, what do you think is there's a question that could you please tell us what type of banks will be winners and which will be the losers in this scenario?
No, I think so. As a bank, it's a kind of a similar experience to probably what happened in the global crisis. So those that for one have a very strong balance sheet, because you need to have the ability to tide over what could be a prolonged period of disruption. So ability to withstand a prolonged period is going to be a big part of it. But I guess beyond that, given the distancing that's going to be there between the bank and the customers, the ability to digitally provide the services will be a big factor of winning over customers' trust. So if you can make an impact in front of the customers during these tough times, I'm sure there will be a much longer and better relationship you will carry forward for the future. So, just to reiterate, a strong balance sheet, a good digital outreach, and maybe use that through a very strong analytical capability to make sure you are well prepared for the future. Those are the banks that I feel will be there for the long run.
Okay, thanks a lot. I think that's very insightful. There's another question which says that what do we need to ramp up existing system across the world, to the new economy to accommodate or get out of the current situation. Mridul, do you want to take that?
Sure. So see, in this scenario, what we actually saw was that demand fluctuation has been huge. It's not a normal progression of demand. For example, if you look at, say, we just talked of, video and other solutions. So the demand, uptake that they have done seen. In fact, even if you look at the key cloud service providers across the world, some of them actually have come to their edge, in this time. And there have been some comparative reports, for example, how Azure has performed against AWS and GCP and stuff like that. So for I think for any organization, it is about saying that how do you create an architecture where you can actually handle variability of demand and actually dynamically deploy your resources so that the customer experience is not marred. And that is where you need to have a dial in your hand, which you can twist to increase the supply as the demand increases, at the same time actually twist it back and reduce supply when the demand goes down, so that you are not sitting on a fixed cost while your revenue is not there. So that is, I think, also going to be a very key thing for any IT professional or CIO, because you need to build a variable and on-demand capacity availability. Many institutions which are actually sitting on fixed costs and the demand actually goes down, you have a huge risk of margin erosion or actually getting into the negative space, because revenue is not coming in and your costs are not going down. So I think this is something that everybody will have to become more and more cognizant of.
Thank you, Mridul. So I think we have overshot time significantly, but I think these are very important topics for discussion. And I think the last question which has come is that what I was talking about, that hardship management or customer assistance, and somebody has asked that do we have a solution. So I just want to tell that we have a solution, as I said earlier, that is being currently implemented with customers in Australia and in Southeast Asia. That's a very, very good solution to for banks to look into, to keep checking the health of their portfolio. I would like to thank all my panelists. I would like to thank all the participants in the webinar. We have another 2 webinars coming as a continuation. As I said, that is like the continued theme, which will give a entire view of how do we address this current situation. Thank you once again. Please feel free to reach any of us in our websites or through our mails, which have reached out to you. Thank you very much.
Thank you.
Yeah,
Bye.
thank you.
Thank you.